Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick, Mitch Hotch, lurking somewhere in the background. What are we talking about today? Probably earnings, right? A lot of them, and Robinhood. Those are going to be the big themes of the day. Amazon, obviously, crushed. Pinterest, crushed. Not everything, though. Atlassian is doing okay this morning. So we'll get to all of that. We'll get to your questions from the chat. I know we didn't get to them yesterday, but we will get to them today because I don't think we'll have a guest. Jason Raznick is questionable for today's show. So we'll have more time to just talk and answer your questions in the chat. As far as overall market is concerned, we are a little bit in the red. Reminder, it is the last day of the month, so maybe it's the end of the month window dressing, but the S&Ps are in the red. The NASDAQ is in the red. The Russell is in the red. The Dow Jones is in the red. Interestingly enough, Bitcoin down 2% today, but Ethereum actually trading higher, which is interesting. Divergence there. Oil is oil, gold is gold, whatever. Dennis, how was your first full day back?
Busy. Lots of action. Obviously, I kind of feel like I got thrown right into the fire here because we had so many earnings and you're trying to get yourself caught up and you don't have a feel from the last earnings report. So you watch Amazon report and get hammered, and then, you're obviously trying to make trades off of that. Lots of, interesting action here. Today seems like a sell everything day, though. There's not a lot of stocks trading higher. Yes, you'll say oil's trading higher because we had a couple good reports from Chevron and Procter & Gamble, or Chevron and Exxon. Yes, you'll say Procter & Gamble's trading higher because I had a decent report, but the majority of stocks are down. So a little bit counter to what this market had been doing. We've been seeing big tech get hammered, and then they run into the reopening stocks, the IWM, the small caps. Today, they're kind of running from everything. If you look, IWM down 0.71%, SPY down 0.74%, Q's down 1.1%. So everything correlated today. It's the Amazon hammers the market today.
Yes. So maybe we should start with Amazon, and I'll give you the numbers and I'll bring out the chart. Amazon's Q2 EPS beat $15.12 versus a $12.22 estimate. Sales missed, though. Interestingly enough, the last time their revenue number missed was the third quarter of 2018. Their sales came in at $113 billion, and somehow it wasn't good enough. $113 billion versus $115 billion estimate. So a mixed report for the second quarter. Some interesting takeaways from this report, and I'll give you some more details here, okay? Sure. Online store revenue, which is, of course, the core of their business, rose 13% year over year. In the previous report for Q1, the year-over-year growth was 41%. Right, Q1 of this year versus Q1 of last year. So we went from a 41% year-over-year growth to 13% year-over-year growth. Third-party seller revenues were lower than the street thought as well. AWS, of course, cloud, their money printing machine, was solid. Revenue up 37% year-over-year for that, but they are in this dogfight for the cloud with Google and Microsoft, and there's some concerns there. They guided a little bit light. Their Q3 revenue guidance was in the range, we'll call it, in the range of around $108 billion versus $118 billion estimate. So a little bit light on the guidance front to go with a very rare revenue miss for Amazon. There is a chart. I do want to show you actually a different chart. This one courtesy of Bloomberg. I'm going to share my screen. I think this kind of sums up why Amazon is trading down here this morning. Where's my chart? There it is. Okay, I think this chart kind of sums up Amazon this morning. This is e-commerce growth. So this is the stat that I mentioned. 41% year-over-year growth in Q1 versus 13% year-over-year growth in Q2 for online sales. And again, is this super surprising? Probably not, right? We've been talking about this for a while now. This growth that it was a perfect storm for Amazon. It was the growth is unsustainable. So not a total shocker, but I think this kind of sums up the feeling here this morning.
Couple thoughts. One, some interesting commentary from the CEO, and this is to be expected. I think he was just saying people are going out more. They aren't staying home and just shopping online. People are going out and doing things. They're going to physical stores. I mean, they want to do that. Is this trend continue? I mean, obviously we go full reopening. It does in the short term, which is probably why they're warning for the next few quarters. But everybody still likes buying stuff online, and people are not going to stop buying stuff online. The convenience of Amazon is just amazing, especially if you get same day shipping. I mean, so you think about that and you think, okay, well, this is a buying opportunity. But I mean, short term, they are warning out a couple quarters, and yes, we're going to continue to see a response. I think if you're buying here, and and it's hard to predict the day-to-day, changing in this market, because it's a market with no memory, like Doug Cass says, and we go up one day, down the next. It seems like buy the dip often wins, but I never like buying on day one. I want to buy after the dust settles to a certain extent. Like think about when you have a stock. I kind of think about when they get hit pretty good. Like, and this is a big hit for Amazon. Don't kid yourself. A 6.78% down, 250 point move is a big hit. But think about it like asteroid hits the surface. Boom, you have the initial impact, and then you get the dust. And eventually it starts to settle. I kind of usually wait, a few days until at least the dust starts to settle, and then we know what we have. Because right now we don't know what the damage from this is going to be. It hasn't even been open in the regular session yet. So does it bounce right back? It could. I mean, but at this point in time, down 243, it's kind of a coin flip. Yeah, you probably see initial rally because you get to buy the dippers come in, but we are right back in the middle of the trading range. 3,000 to 3,500 is where the stock has sat for a year. You're at 33.53. You're really in the middle of nowhere. Down at 3,000 is a huge support level. Like if you're looking out at the longer term chart, if you can go out there and show it, that 3,000 level is immense. It's huge. I know we kissed through it a couple times, like 2,900, but call it 3,000. That's where your major support is. That's still a long ways down from here, and it's not getting there today, but could, it continue to drift? Could you eventually get down there to test it? Maybe. Scenario analysis would say I would be a buyer at 3,000. 33.53, I'm in the middle of nowhere, so it's more of a coin flip here. Like I said, swing at the pitches that are up the middle. Don't swing at the pitches that are in the dirt. I think if you're buying Amazon today, you're swinging at a pitch in the dirt, and it's hard to tell. Sometimes you can still get, get a good hit off a bad pitch, but it's not an easy pitch to hit here today.
Yeah, and if history is any guide, we know that dips are generally speaking to be bought in Amazon, but the question is, do you have to be the person to come in today and do it? I don't know.
Buy on day one is often dangerous because you don't know how ugly it's going to get. So and I'm laying off of Amazon, but the effects to Amazon now are significant because it is not just bringing down the tech sector. We saw everything roll over here last
let's
night.
talk about that.
Yeah, so this is Amazon. Don't kid yourself. If you're looking for a reason for the sell-off today, I know some people look to China, but it's Amazon. And we're, obviously seeing significant pullbacks in the Qs, but, the IWM even, which has been basically moving counter to big tech on a lot of these days. It did with Facebook as well. That is not the case here today. IWM is down this morning. Maybe we're going to get some separation. Maybe we'll start piling back into the brick and mortar trades. If Amazon's not doing well, the logic is, okay, well, they're saying about brick and mortar, let's go get the brick and mortar stocks. But even the brick and mortar stocks are trading down here today. A lot of retailers trading down. So, Walmart, which has a big online presence, is a sympathy play target as well. They're both down significantly because they have big online presences as well. So if Amazon online is slowing, it's logical to think the Walmart Target would be slowing as well. So it's a difficult day is really what I'm trying to get to here. I don't know, like I'm torn. Certain stocks are at support levels, then you can buy them. Like I was feeling pretty good about Uber at the 44 or at the at that huge support level of 43. It never even got down there in the regular session, then it bounced out of it. But today, just on Amazon, it's difficult.
Yep. Survey in the chat. Would a stock split on Amazon get you interested? in the stock? Yes or no? It's in the chat right now.
Yes, it would, and it's not going to happen anytime soon. They would have announced that on the disappointing earnings report if they had any intention to announce that. So we might as well take stock split off the table, because if you got a crappy report, and it wasn't even necessarily a crappy report, but it wasn't going to meet the high expectations of the street. And they knew it probably wasn't going to meet. I mean, they're warning about a couple quarters. They probably knew the stock was going to go down. If they didn't want to put a stock split in, to help the stock out, that means that they just don't care. And I think all these rumors about a stock split are not going to materialize. So I'm saying I do not believe Amazon stock split is imminent. Not at all. We had Gasparino saying it a couple months ago. Nothing materialized. This would have been the quarter to do it. If they were going to do it, is telling me they have no intentions of doing it, at least not this time.
If anything, this report just reaffirmed my belief that, like, if I was the CEO of a company, I would never in a million years go public, because this was like a no-win scenario for Amazon. This report was objectively, like, still very good, right? But it wasn't unbelievably good. And that's the problem, I guess.
Street expectations just through the roof.
I know.
And they've been through the roof for everything. There's so many companies that are beating earnings and going down on the earnings beats. I mean, that's the environment that we're really in here, is that this almost unreasonable expectations. And just like the banks. I mean, what do they want? The banks started going down right after they reported blowout numbers. I mean, you get like a Goldman Sachs that completely blows the numbers out of the water again. And the stock went down for 3-4 days afterwards. And yes, it's come back up here with rotation in this market, but it's difficult. Like, it's not just we blow it away, the stock goes higher type of market. And if you miss, the stock does go lower. So it's tough to be actually. Some earnings season is just like, the majority of stocks are beating and the majority of stocks are going up. So your odds are, if you're buying a stock into earnings, you're going to make money. This is kind of the opposite of earnings season. If you've been buying stocks, ahead of the earnings reports and taking them through, there's been a lot of disappointments, at least so far.
Yeah, and just look, and this is the history of Amazon earnings, and you can see the revenue is on the right-hand side here. The last time they missed, to Dennis's point, this is rare. Amazon does not typically miss on the top line revenue. Yeah. Like I said, the last time was Q3 2018. I think I was still in diapers then. So, it is rare, right? And I had another thought I was going to say. Is just, but I think he said it there. Is just impossibly high expectations, and what didn't help here? What didn't help was the fact that the other FANG stocks did blow it away, right? Apple and Google,
and they didn't rally on it,
and Facebook,
right,
and
they didn't rally on it,
right. That's
which you got Apple blowing it away, Facebook blowing it away, and they went down on those reports. So I mean, Amazon not beating. Yeah, it's going to get hammered on it, and that is exactly what we're seeing here today. So, does this bring earnings estimates down for Amazon? Does this, cause some, downgrades in that? I don't know. Sometimes you always get one or two analysts that chase price, but the 3,200 is initial support. I would say 3,350 is really in the middle of nowhere to me. I mean, Elconin can always find a level. To me, I don't see anything in there. I see the first major level of support at 3,200, and then I see the super duper support that Joel Elconin likes to use, 3,000. So those are the two levels that I'm looking at on Amazon if I was looking to buy it. I am long, full disclosure, still remain long Amazon, not going anywhere. It's in the long-term investment portfolio. I'm sticking with it. But as a trade, I have nothing on right now.
Not doing a survey, but just in the chat, anecdotally, if you want to tell us, how your Amazon spending compares now versus, 6 months or 12 months ago, let us know. I'm curious because my Amazon spending is way down, right? I think most people's probably are too. In this same vein, let's talk about Pinterest here.
Sure.
It's sort of the same theme this morning.
Yeah.
Pinterest had earnings last night. I'll bring up the chart 1 second. EPS 25 cents versus 13 cents. Sales of 613 million versus 561 million. That is not what the street cares about, though. What the street cares about is monthly active users, okay? And they are declining. U.S. monthly active users have fell 7% year over year, even though global MAUs did grow. In the U.S., monthly active users declined, and they guided Q3 revenues just a smidge on the light side. They said revenue will grow around 40% in the current quarter versus like a 43% estimate. So smidge light on the Q3 guidance, and monthly active user declining year over year. This is what the CEO said. There was a lot of activity around home decor, gardening, cooking, crafts, or do-it-yourself. As restrictions began to ease, those use cases are less relevant now. I mean, yeah, right. This is the same thing we just talked about with Amazon. It is the same. It is the same theme. The reopening is now the reopen. It has happened, and people are going out.
Yeah, we're seeing the result of that, where we were talking the movement from the stay at home to the reopening, which we saw a huge movement back in the beginning of the year into that trade. And it's come off to a certain extent, and the Delta variant is a wild card here, which, we're not going to get all into here today. But I mean, that is the wild card for a lot of these stocks. That's a wild card for the stay at home versus the reopening. How widespread is Delta? How much are we going to be able to contain it? How well do the vaccines work against it? All those questions are still to be answered. And that's the risk, when you're buying the reopening stocks. And that's also the risk when you're buying the stay-at-home stocks. I mean, if, Delta, isn't as, or if it's not as bad as, some of the media is making it out to be, then the reopening trade will continue to catch steam. So I don't know if anybody has the answer to those questions, but, this Pinterest report and the commentary from the company makes sense. Technically speaking, 55. I mean, that's where you've bounced out of back in May. If you go farther than that, we actually were back in October. So I would think the logical spot for this to bounce would be $55. I don't know what it did pre-market. I haven't looked at if it's been lower than this or if it just continued. It looks like it's just been a slowly continuing. But I would think 55, you'd find some logical support down there. It's down 20%. It's been absolutely hammered. I mean, is it safe to come in now? Again, you're buying on day one, and I never like buying stocks on day one. I like to buy them when they start, basing and starting to go up again, as opposed to trying to catch the falling knife. So I won't be buying Pinterest today on day one, but I mean, a lot of people will be. A lot of buy the dippers will be in there, and maybe it goes up, 57. Maybe it catches a bid and gets back up to 60 or 61 because people think it's overdone. That's risky trading, though, and I just don't like having that kind of risk where I don't know where the fallout's going to end. Anybody who says it's 57.40, it's just a shot in the dark. Nobody knows where this thing's going to turn. You can day trade anything, but if you're coming in as a swing or a long-term investment, I like to wait until I have momentum back on my side. And right now, momentum's definitely not on my side in Pinterest.
Yeah, it's the same exact theme. Okay, there's a few questions in chat. Actually, well, let's get to. I want to ask this one question from James. He asked it yesterday. We didn't get to, but I want your thoughts, Dennis. With regards to market breadth, we've been talking about this for a while here. The Russell does not look great. The SPY and the Qs look much better on a relative basis. I'm curious to get your thoughts on market breadth right now.
Well, S&P made new all-time highs yesterday, so we know what has been keeping it up, and it has been FANG because IWM has been underperforming for a while. We are still significantly off the highs. I mean, if you look at the IWM, we haven't even got back to where we were in March when we were at 234 and 221. So you've got a tidy little 4 or 5% correction in small caps, which has not been seen at all in the SPY because of FANG. I mean, DIA has held up well too, and there's some major companies there that have been holding it up. So if you select, those mega caps really holding up some of those broader indices, but the IWM, which is equally weighted, isn't held up by just those mega caps. Tells more of the true story of where this market is. So it's a market that is confused right now. That's what I'll say. It's a confused market. It wants to be bullish. It knows it's got the Fed at its back, but it's got, COVID picking up steam here again. And, it's got this, great reopening that's just turned into the reopening, and it doesn't know how to process all this. And then you have China as a whole wild card. So, I mean, there's lots of, unknowns here. And I think that's why, seeing a market that's just chopping around. It doesn't have a general direction here right now. You look at SPY and you think, the general direction is up, but the IWM hasn't went up all year. I mean, we go back to January and we were 220, 225. We're 221. Really, this is the broad market here. And I guess not January, February, because we had a run up from January to February. But, we've been digesting really the overall COVID move that we had in 2020 and the beginning of 2021, which was an enormous move. So we're in a digestion period. Does the market eventually start to go higher? You like to think so, but with a lot of unknowns right now, that's why I still stick with a lot of cash. I've been sitting on a lot of cash and haven't put a lot of work here yet because I don't see that broad signal. Breadth does concern me. It does concern me that a lot of these smaller caps are not participating. So I think it's still guilty right now until proven innocent. You can say, oh yeah, S&P made a new all-time high yesterday, but again, we know it's just 5 or 6 stocks that really control the SPY to a certain extent. I mean, those top 5 components or top 6 components make up like something like 15 or 18 or 20%. It's a huge amount of the index. 21?
It's more than 20.
It's more than 20. So it's a huge amount. And, we just had all those reports and they were all pretty good. And those companies are firing on all cylinders. That has really what's held the SPY up. But the IWM tells a different story. And again, I'm going to say it's confusion.
This is a 6-month chart here. IWM is in the red over the last 6 months.
Yeah, 12%. So that, and the difference between that is all FANG. That's your FANG separation right now.
Just to be clear, it's not. It's down 0.12%, not 12%. But yes, point still
completely flat in the last 6 months in SPY. So people who are saying, "Wow, S&P is so hot," sure, it is, but it's hot because of Amazon had a big move. And obviously that's going backwards here today. But Facebook has been moving, and obviously Apple has had a huge move, and Microsoft has had a huge move. These are huge components in that index, and they've held up very well. So, but right now we're just in a mixed market. And so I'm talking to the investors out there. I think you want to have a cash cushion still. Now, am I coming in and selling on the day? No, you got to be selling rips and buying dips. So if you're worried about your position, you're worried about that you got too much stock on, you're using rallies to sell into. I don't sell into dips. I'm not looking at my portfolio today thinking, what can I sell? I do that on up days. I'm looking at, am I looking what I can buy? If you're sitting at 100% cash, maybe. But I'm kind of comfortable where I am in my long-term portfolio. Like I said, trading, I'm going to make 200-300 trades today. I mean, in and out, in and out, in and out, in and out. Scalping all over the place, once I get done the show. But, right now, from an investing or swing trading perspective, I have literally almost no swings on. Like almost none right now. And back in February, I had like 30 of them on. So I really have no swings. And I do some short swings, but mostly long swings. But I just don't see anything that's like that enticing that I got to go out there and this is, the time to be striking on this. I don't see, a lot of really good setups right now.
You should have been here on Tuesday. JC Prex was all about I've been in cash like all summer basically.
Well, it's great. I mean, JC's a great, and JC we've had on, and we're friends with JC. Yeah. Obviously, he's been a friend of the show for a long time. But, JC isn't afraid to go to cash.
No, he's not.
When he's uncertain, he's not afraid to go to cash. And that he's a smart trader. And he's been around a long time because he's not afraid to, say, hey, this market doesn't look great. I'm going to sit it out. If I miss some moves, I miss some moves. But right now, it's risk reward. And there's still a hell of a lot of risk out there. And the risk is, the risks are known, but we just don't know how, and China, and we haven't talked China here yet. But, again, like yesterday, we were saying when, we had Alibaba trading up at 202 in the pre-market. Yep. I'm like, it just had a huge move. You're coming and buying it now. You're doing it backwards. And look what, 24 hours later, Baba gives back half of the move. I mean, you just can't be chasing in this market. It's telling you again and again and again. You get a big move, a big bounce, and it looks like what it was dead cat bounce. Wait for it to come back in. Now you get a pullback. Now you're getting some levels. PDD, same thing. We were talking Pinduoduo yesterday at 95. And I'm like, if you're buying it now, it's tough because it was just 78 3 days ago. I'm like, maybe you get back in the mid 80s. Maybe you get interested. Well, hey, we just fell $7. We're at 88 now. Get down to 85. Maybe the candle from 2 days ago, the low, maybe it kicks around 85. Maybe you do strike on that one. So if you wanted some exposure to China, you're getting a little bit of a pullback now. But again, there's a lot of unknowns there. So there is a lot of risk. Am I coming in and buying Chinese stocks? I don't know. Maybe as very short-term trades, not sticking in the long-term portfolio right now because it's just all the unknowns. Don't be afraid to be in cash.
I want to get to this question from Matt Miller. He's asking about Pfizer, which we touched on for like a brief moment when it had earnings. I think it was Wednesday morning now, a few days ago now. Just with regards to like unknowns, and we don't really have a super clear picture yet of the Delta variant and how serious the spread is or not, and whether it's going to cause any similar type of economic implications as the original COVID variant, and whether or not we're going to shut down. All of that is still unclear. So But with regards to Pfizer, they did raise their guidance specifically on the backs of the Delta variant. They said that let me show you in the pro. Let me bring it up.
Let's see it.
PFE 2 days ago. Come on, buddy. All right, I have it on a different screen anyway. Anyway, they beat, and they raised their guidance. They raised their guidance from. Oh, there it is. Now reload. Let me zoom in. It's a little bit small for you to see. There we go. Pfizer. This is a couple of days ago. They raised their revenue guidance for the year by a couple $1 billion, and it was specifically on the back of the Delta variant. They said that a third dose of their vaccine strongly boosts protection against the Delta variant, and that people may need that. And because of that, we're going to raise our guidance.
Yeah.
So anyway, with regards to the chart, though, the chart looks interesting.
We're getting back, and Pfizer.
Look, it came all the way back to that was no, not that wasn't it. This right here, that green one. This was vaccine approval day right there.
Yeah.
That was it, and we're all the way back now to that September high.
And when they got back there, and I mean, we've had multiples. Like, if you want to go out on Pfizer, this $45 level has not just a couple years of memory, but decades of memory. Go back to the year 2000, and I'm going from my memory here too, but there you go. People who think long-term investing, you just buy at any valuation. This is Pfizer. You were paying, I can remember, 45 times earnings back in the year 2000 for Pfizer. Well, you know what happened? The company kept growing, but the stock, growth rate came in. And again, when you're paying 45, 50 times for a pharmaceutical company, you're paying too much. Here you are 22 years later, still trying to get your money back. People don't realize that in Pfizer, that because we had, anybody buying 2011, 2012, 2013 is doing very well, but you were buying it decades ago at a PE of 45 or 50. You got punished severely for paying up way too high of a PE multiple for a company that just couldn't sustain that growth rate. And now you look at the Pfizer PE, and I think it's around 17 or 18, which is under a market multiple and reasonable. 3.65% dividend, reasonable, all reasonable. I own Pfizer in my long-term account. I actually did buy it back in about 2010, and I think my average cost basis on Pfizer is $13. So it's been a good one for me. But if you're buying it 10 years sooner and paying a multiple of 45, I think at that time I was paying a multiple of 12. So, I mean, again, long-term investing, people don't like to put their CFA hat on. They don't like to look at fundamentals. But if you're a long-term investor, you got to know what you're paying. Valuations got to be somewhat reasonable. And when you're paying PEs of 50 for Walmart or 50 for Pfizer, it's not reasonable. And that's why, people were punished severely for buying those stocks back in the year 2000 in a huge bubble. So here we are. We are back to where we were 21 years ago, 22 years ago, also where we were just a few months ago on vaccine approval or in 2020. There's big congestion up here at 45. There's a lot of resistance up at 45. We're at 42.78. There's probably room to 45. But after that, maybe it starts to get tough again because you have people from 22 years ago still trying to get their money back. So I'm torn. I mean, obviously you got paid a lot of dividends through that time, but it does look good on a technical basis because it's broke out through 42. So I do think there's room to Pfizer for 40 to 45. But this isn't a stock that's going to blast off 45 to 50. The Delta variant probably is good for Pfizer. It's not good for, a lot of companies out there, but probably good for Pfizer. So if Delta continues to spread, I think Pfizer, could move up to that 45 area. So short term, I think you got room to 45. Long term, who knows?
Normally when we say, oh, there's people underwater from like a decade ago, I say it a little bit in jest, but in this case, because it is Pfizer and because I don't know if it's still in the Dow, but it was in the Dow. I don't think it's in the Dow now, but it definitely used to be. And it's like a core. This is like a, mutual fund type stock. This is like India one forever. So yeah, there are probably people that have been in this thing for 20, 30 years. But they've been getting paid the whole time. Anyway, yeah, interesting. It's
valuation does matter in the long term. Doesn't matter at all in the short run. It absolutely matters. If your holding period is 20 years, you better be buying reasonable prices.
Okay, speaking of valuations here, let's pivot away from the earnings for a second and talk about our dear friend, Robinhood, which I was reading this morning, according to data compiled from Bloomberg, had the worst day one performance for an IPO of its size ever, in terms of how much capital they raised. It was the worst one-day performance. The stock closed down 8.4 4% after opening at the IPO price, which
Yeah.
in and of itself is never a particularly bullish sign when you open at, in this case, it was $38. That was the IPO price, and that's where it opened. So, I think our takes haven't changed. Dennis and I are both like wait and see mode at the minimum, wait and see mode. But it was an interesting day one reaction. And I will also draw your attention to, Dennis, I think this will interest you. The SoFi chart, if you go to the 1 minute chart on SoFi yesterday, which I know you are loath to do, but I'm going to do it anyway, and you will actually see a volume spike in SoFi when Robinhood opened. It was
Really?
It was right there.
That's interesting.
It was right there. So anyway, back to the hood. I don't know if you have thoughts on that IPO.
Well, same thoughts as yesterday, and if and it kind of sucks, but a lot of people did get allocations on this, and I said this yesterday. When Facebook originally, everybody went in to get their allocation, and everybody got it. When you're getting your full allocation, or if everybody is getting some stock, and maybe you didn't get your full allocation, but if you're getting stock, those usually aren't the good ones. I know it's sad to say, but that's just the way it works.
It goes back to
you have a crowded trade because everybody got it.
Like it goes back to, would you want to be a member of a club that would have you? Right.
Well, that's it. That's exactly it. So everybody gets their allocations. They're like, okay, now I'm going to make some money, and it starts going down on you, and you're like, wow, this just, this is typical. It's typical when you're seeing everybody on the street get some stock, and retail get some stock. Typically, they don't do well for a few days. I mean, okay, so it's come in. Kathy bought a whole pile yesterday, predictably. I mean, that's what she does. She buys every single hot IPO. She buys hot stories. That's her job, to buy hot stories, regardless of valuation. I still have not crunched the numbers on this to know if the valuation is reasonable or not. I'm assuming it's not, but I haven't crunched the numbers yet. I got to keep waiting. The only bogey you got is yesterday's low, which is 33.35. That's your bogey so far. Takes that out, and stocks making new lows, you got to go. So if you're doing it for a day trade and you think the low is in, you got to lean on that 33.55. And if it takes that out, you got to sell it. That's or 33.35. Takes that out, you got to sell it then, in my opinion, as a trade. But I'm not even touching this. This is day one. It's day two. I'm letting the dust settle here for sure, because there's, I think, a lot more dust to be made.
Who was it in the chat that just asked to explain Douglas Goff, explain allocation? So Robinhood is sort of a unique situation here, because most, dare I say all, or nearly all companies going public will not allocate a large percentage of their shares specifically for retail investors. In this case, Robinhood did that because they let their users get access to the IPO prior to the open, which you basically never see. So, but in a normal situation, right, when not Robinhood, there are IPOs in which retail traders can get access to ahead of time through your broker, there are many services that offer this.
It's usually full service brokers. Like if you're a big customer of a full service broker, you might get some stock on some of the good ones.
Yes, so what will happen is the underwriters and the company will work together, and they'll figure out, okay, here's how many shares we're going to offer, and we're going to we're going to divide these shares. It's like a pie. We're going to divide the pie up, right? Here's the percentage of the pie we're going to give to the big institutional investors. Here's the percentage we're going to offer to retail investors. In this case, it was a large percentage offered to retail investors, which again, you basically never see. And so that's what happened yesterday. So basically anybody who could get Robinhood shares, who wanted to get them, could get them. And so it creates
at least getting some. There's a lot of people that got some. Just chat is, and curious. You don't have to say if you don't want to say, but mention if did anybody get an allocation there in our chat?
We had a few people in chat say they.
Yeah, like just mention if you got an allocation, throw it out there.
Yeah.
I'm just curious because I knew a lot of people that got an allocation. That's why I tend to think that this was fairly easy to get, at least some. So
yeah. And Dwight G says he did, and this comes with terms. In this case, you have to wait 30 days before you can sell, which actually is not a very long time. And typically, a lockup's like 3 months or 4 months, so or even longer than that, like 6 months. So 30 days is not a very long time to be locked up. But in any case, that's the allocation thing, and Robinhood was sort of doing something different than everybody else with regard to their IPO. So we'll see how it shakes out. We'll see what happens in a month. Let's all mark down August 29th, because that'll be when the lockup expires for all the users that got a piece yesterday. So let's all remember.
I mean, TYO saying they got 20 shares. They had tried many times before and never got one before, and they got some. So, I mean, a lot of people, looks like in the chat, did. So it's widespread that a lot of people got shares.
Right. But again, and typically it's like you have to ask yourself, oh, why did I get shares? Is it a question of low demand? In this case, it's probably a mix of lower demand, but also maybe more high supply. Because again, there was a lot of shares that they were. I can't stress this enough. A lot, like I think tens of millions of shares that they were specifically allocated to retail investors. So a lot.
I think the demand was high, but I think you're right. I think the supply was very high.
Yeah, a lot of shares.
And obviously that's why stocks go down. The supply is higher than the demand, stock price goes down. So it came in. So let's wait. Let's see, what it does from here. So, it will eventually have a bounce. Usually day 2 or day 3, they have a nice rip and rally. We'll see what happens. This is day 2. I'm not trying to predict where it's going to go, though.
Yeah. Okay. And I should mention, because he's sitting here next to me now, Kathy Wood did buy, she dipped her toes in yesterday and bought, we'll call it 1.3 million shares.
She don't play games. She comes in.
She comes in big.
She comes in big.
Not actually that big. Because
she's a mover and a shaker. We'll give her the mover and the shaker title.
There's a big float, so it's not actually that big. But anyway, let's move on from Robinhood. Where do you want to go? We had
so many earnings stocks here.
I know. We can go team. I'm looking at the mover.
Can you give us a good story here this morning? Because obviously we're looking at Amazon and we're looking. Let's talk something. You can't go to Caterpillar because it's getting hammered here for a good story. So, well, not hammered, but it's down $5.
I can give you team Atlassian.
Oh, we got one.
Actually near the top. Near the top.
Whoa!
I know.
Breakout Atlassian. At last, we have a winner.
At near the top of my movers pool. Yeah, you know what? Do I have a soundboard's not plugged in? Forget it. Q4 earnings per share 24 cents versus an 18-cent estimate. Sales of 560 million versus 524 million. They gave Q1 earnings per share guidance in the high 38-cent range versus a 31-cent estimate. Sales in the high $500 million range versus a $540 million estimate. So strong earnings, strong guidance. And the stock is up, call it 11% this morning?
Beating a raise and the stock didn't run into the numbers. That's the recipe for success, because you look, the stock really has done nothing for a month, just consolidation station waiting for the report. Typically we do see these run-ups ahead of the reports and then the expectations are higher. This was not the case here. You're at a big whole number of $300. It's funny, these whole numbers just work. If you looked at options, you probably see some open interest at 300 as well. But that's where it's just kind of sitting and perched. Does it take out 300? Possibly. I mean, stocks are making new all-time highs. Sky's the limit. But when stocks are making new all-time highs, you're looking at those big handles, 250, 300. 300 is a logical stalling point, and that's where it's stalling in the pre-market. Obviously, traders want to know it's got the oomph to get through 300. Sometimes it takes it out by $1 and then comes back down through it. So hard to chase the stock up 31 points, but it's good that it's holding up.
All right, so this was your big winner, is your big winner of the morning. Let me go back to my movers tool. See, do we have anything else?
We have Exxon and Chevron. We could do those together. Both of those stocks are trading green. Both of those stocks are definitely not Amazon. So if you're looking for something that is not, obviously exposed to, online sales, it's definitely an Exxon and a Chevron. So, I mean, these two stocks have bounced back from their lows last week. They really got hit there 2 weeks ago, right before I left on my trip. They were hammering the oil stocks. They've come back a long ways. Here's the problem is you look at this and now you're getting into an area of congestion, especially on a CVX. 105 was major resistance. You're $1 below that. I got to think that CVX probably stalls out in that 105 area again. So I'm not coming in and buying it up $1.33, although, you'd like to buy a good story. If I go and look at the open book, 105, 26,000 shares. It does stand out like a sore thumb because there's not much else out there, but that's not that significant. I'm looking at the open book on the New York Stock Exchange to see if there's some size that would hold it down. If that was 260,000 shares, I'd say that is significant. 26 is pretty small for Chevron, already considering it's trade 173,000 shares just in the pre-market. But 105 seems like a logical point to stall out. So I'm not coming in and buying it here. Am I necessarily shorting at 105? If it looks like it's going to turn there, maybe later this morning. Probably not off the hop though, but you're looking Exxon, same thing. Got hit hard, coming back to an area of congestion.
These charts are mirrors of each other.
Yeah, they really are, and this is why they're great pair of stocks too to trade with each other. ExxonMobil, I got to think $60. I'm going to look at the book. I'm doing the same exact exercise. I'm going to look, is there some size $60? Oh, there sure is. 105,000 shares at 60. So your quick math says it takes a lot of money to get through that kind of size. So you're talking about $6 million worth of stock to take it through 60. So that's some size. So I would think, logically speaking, again, that 60 could be a stall out point. Can it take it out? Stocks can do anything once they open. Is it going to take it out in the pre-market? Probably not, because it's only traded 163,000 the entire pre-market. It takes 105,000 shares just to take it through 60. So you're trading 60 cents below that right now. So I would think that ExxonMobil probably stalls out around 60. I would think Chevron probably stalls out 105. If I was long those stocks, I'd probably be selling ExxonMobil probably, somewhere in the mid 59s, which is almost where you're at right now. Mm-hmm. And if I was long Chevron, I'd probably be selling the mid 104s, which is you're almost there right now too. So I'm more inclined to sell these stocks as to buy them. But if oil starts taking off, we go to this reopening trade, they can take it out. So, more interested in selling along than initiating a short on these stocks.
Okay, there are so many earnings. We had Caterpillar, we had Twilio, we had First Solar, we had T-Mobile, Gilead, we had Procter & Gamble. If there's any specific one you want us to look at, drop it in the chat and we will try to prioritize because there's no way we are getting
250 stocks covered here.
All of them. What the hell happened to Sava? Yeah, I saw a few people mention Sava here. Let me pull up the chart. They had some data out yesterday. This was a very interesting reaction because, where's the chart? There it is. So the reaction was very interesting because it opened. It basically ran up into the release of the report today morning. Right, you can see it opened basically at the high of the day. The initial reaction, you can see those candles, but then it reversed, and then it reversed again. Right, two reversals. Right, so. Very interesting reaction. Obviously, we aren't doctors. I can read you the headline on Sava, but I am not expert enough to interpret what the headline really means. They had a very small trial with 25 patients. This is for their Alzheimer's drug that showed a 65% decrease, I guess, in Alzheimer's biomarkers. As far as I know, there aren't many other companies that are as far or further along on an Alzheimer's treatment further along than Cassava. Right? We know Biogen their drug was conditionally approved, but they still have to do another trial for that. Cassava is in the race here. So again, I don't know enough about the study and the science of it to understand why the stock is trading lower. But it is an interesting reaction nonetheless, too, especially when you consider that there's really only a handful of public companies in this race, and Cassava seems to be near the front of the pack in that regard. So, I mean,
this was just a pull the rug out from under every person who bought this on the positive headline trade. And, classic buy on the rumor, sell on the news. We opened up at the highs and it went straight down so fast. Like if you were trying to protect yourself, you bought that high thinking 141 is going to get you 150. This thing was 135 seconds later. And then, you keep going, it was 130 and then 120 and then 110 and 100. And we literally, 20 minutes after the open, had lost 40%. It was a craziest move. And then you got the dead cat bounce, the classic, 9, 10 o'clock where we get the relief pop.
Yeah.
And then all the way back down and now making new lows here again. There's so many longs caught in this. And that's showing you why you're getting follow through here on the next day as well, down 16. Everybody's caught. I mean, the low back in July, $72. It's 86 here right now. $80 if you want to just ballpark it. But man, a lot of longs caught on the wrong side of this thing.
Yeah.
If there was ever a trade to let the dust settle on, it might be this one.
Yeah. This one.
I am not touching this. This is high risk, high reward always, but high risk. Way too risky for me to trade.
And someone in the chat mentioned this as well. For whatever reason, this has gone viral. The stock has gone viral on social media. I mean, just look at the volume from February, right? I mean, insanity, right? This is a virus. This is in the same class as AMC and GameStop in that regard. For whatever reason, I don't really know why. Maybe it's the interesting, data, the Alzheimer's thing. I don't know. But yeah, rug pull for sure yesterday. Manuel asked about one that I almost forgot about, but thank you, Manuel, for reminding me about AMD. Dennis, we finally did it. We finally
over the 100.
We finally broke and closed above $100.
Yeah.
Everyone,
sadly, without me in it.
Give yourselves a round of applause if you're in AMD, because it seemed like it took forever to get to 100.
I'm giving myself a round of booze. I sold this thing at like $92 or $91, and then it went down to 85, and I was feeling good about myself. I did not rebuy my stock once again, and here we are. I look at this thing at 102 saying, why did I sell it at 92? So, and I talked about it putting it in the long term. I had it bought for a swing at 76, and I sold half, and I was like, you know what? I'm going to hold the other half maybe and stick it in my long-term account, not look at it again. And then we had the ugly day where, it came down hard from like 95 to 90, and then it went down to 87, and then it bounced up over 90, 91. And I was like, that's the bounce to sell. It's like the 50% retracement of that little move. What I'm talking is July 7th and 8th. And I talked myself out of the trade, and now regretting it, seller's remorse once again on this as it's broken out through 100. And you know what? Sky's the limit. Stocks making new all-time highs. Those are the ones you want to own. So in an environment that's stocks have gone nowhere, this is still healthy. So on pullbacks here, I think I'd be a buyer of AMD.
Yeah, exact. Sky is the limit. We are in blue sky territory.
Love blue sky territory. It's a great feeling when you're along a stock and it's in blue sky territory, because it means they can continue to go higher. It's a big, maybe oversized move. I'm not chasing it, but I like buying stocks making new all-time highs.
It means that the path higher is probably easier than the path lower.
No pain.
Right.
No, nobody's stuck. Nobody's like, oh, give me my money back. Only people stuck are shorts. So if anybody's short AMD,
I don't know who. I don't know who will be short AMD, frankly.
I don't know. Maybe people who thought it couldn't get through 100, but it did. It blew through it yesterday. And Xilinx report helping that. Obviously, we got the merger on the table.
I don't even know what the deal is with that. It's been almost.
Well, China's got to prove it.
It's been like 10 months.
Yeah, with China. We're waiting on China.
Oh, boy.
So you could be waiting a long time. You got to get a China approval on that. And we know we're at political warfare, it seems like, with China right now. So who the hell knows when they're going to look at Xilinx and actually approve this merger. But, that's the caution if you're an NX buyer, I guess, is that you never know. Obviously, it's still trading in the risk arbs or trading it with AMD, but you never know. And I mean, if AMD go down and Xilinx doesn't get approved, maybe a bit, but XLNX would get hammered. So if you want to own the two, it's probably better to just own AMD.
Good logic there. Let's look at First Solar here from Robert in the chat. FSLR, their report was out yesterday after the close. Earnings good, sales good for the prior quarter, but going forward, they lowered their EPS guidance for the year, and they lowered their sales guidance for the year. So the stock is trading lower today by 1.72%.
Bought at 73, sold it at 89 in the swing trade account. I want to get my stock back. I'm hoping to get it back in the in the mid 75, 76. Obviously, I don't think you're going to get on this report. It's pretty quiet. I'm hoping, if the market pulls back, it's on my shopping list. I would buy this 75 to 77. So that's what I'm waiting for to try to get it back. Maybe a strike at the low from 3 days ago, which is $78.93 or $80 is a good level as well. There is some good levels in here. I might have to pay up a bit. Maybe it's wishful thinking to think I'm going to get it back at 76. But I've played First Solar a couple times. It's a good trading stock. It's one that seems to be in favor and then it's out of favor and chops around a lot. And, if you're in and out, it seems like you make more money than just buying and holding this one.
I feel like there is no industry that rotates quicker between being in favor and out of favor faster than solar.
It's true.
It goes from when it's in favor, it is loved, and when it is not, it's hated, and it can change 3-4 times in a month.
Yep,
it feels like right. So typically, you see generally most industries you get longer term trends. In a few months they're in, a few months they're out. Solar is constant whipsaw, whipsaw.
Yeah.
Let me see. I'm going through the chat here to see what other people are talking about. Marshall asked if we can look at Spotify, which had earnings a couple of days ago. I didn't.
Wow, that got hammered
too closely at it. Or no, we did actually, and they're we talked about this when it
bounced right where it should. you know, where we got down to the May lows and the buyers came in. So that's the good news. So now you got a bogey, and your bogey is 213. It's 225. That's up a lot in 2 days. I think you want to do some back and fill and maybe get this 217, 218, and you lean on the 213 or even the May low of 211. But it bounced where it should. You're in a high valuation stock, though, in an environment where we're not as, you know, into just the story now. We are into a little bit of valuation as well. So I'm a Spotify subscriber. My wife has, you know, the family deal or whatever, where we've all got Spotify accounts.
Yep.
I think it's like $13 or $14 a month. So, you know, there's a lot of subscribers, and she's really happy with the product. But the valuation's extreme. So 211, 212, I think from technical level, that's, you know, the level. If it took out 211, I would not want to be long it. But if you are looking to get long, maybe get in the teens and you stop yourself out under 210. Again, look what I'm doing. I know I'm like a broken record here, but I'm trying to set up, you know, it's about repeating, you know, like I come in here and I'm saying the same things a lot of times, but I'm trying to repeat the strategies that work. And the strategies that work are you get yourself a level. It comes back down, test that level, you lean on that level. You don't hold it through it. It starts taking it out. You got to cut the loser and you move on.
And I wanted to say, notice what Dennis is not saying. He's not saying, oh, I like it to go to 250. I like it to go to 300. He's not saying where it can go higher. He's saying where he would control his risk lower.
Always the first step. Where
right.
do I control my risk? It's always the first step in absolutely every trade you make. Where's my out? Where am I cutting this loser? Where am I getting out? I know in the long-term investment portfolio, sometimes I don't cut the losers, and I probably should. I probably would do better in my long-term investment portfolio if I always cut the losers. But in the short-term trading, in your trading account, absolutely. The very first step when making a trade is not thinking about how much money you can make, thinking about how much money you can lose. Where is my out? Your out is clear here. It's 210. So if I'm buying at 224, I'm risking 14 points. That's a lot for me to stomach. I'm buying at 217, I'm risking $7. Okay, I can stomach that on a $200 stock. So that's why I'm probably not buying at 224.
What about the casinos here? Dino's asking about Wynn, which we haven't looked at. And I guess they report earnings
been terrible
on Wednesday. They report earnings Wednesday afternoon.
They've been absolutely terrible. The reopening bounce, they did not participate in. We saw a big reopening bounce in the last couple of weeks in like American Airlines, even the cruise lines. The casinos did not participate in that reopening bounce really at all. Las Vegas Sands has been a dog. I got in the long-term portfolio. It's been an absolute dog. Wynn, WYNN, straight down, really didn't participate, making new lows on the move. I hate stocks making new lows. I do think that stocks have value, but I don't know. Like with the Delta variant, it's a wild card. I mean, if we all start to like get scared to go to public places again, then you start thinking, I don't want to own the casinos. So I don't know where this Delta thing's going, and that's why I wouldn't add to it.
Let's remember, with regards to the casinos, if you're going to look at Wynn and LVS and MGM together, LVS now has zero U.S. exposure.
Yeah, but the thing is, Delta's around the world.
No, I know.
So it's not like Delta's just in the U.S.
Yes, I know, but I'm saying if your logic is, oh, but we've fully reopened in the U.S., that doesn't help Las Vegas Sands.
Yeah,
right. That helps Wynn, it helps MGM. Does not help.
But still, Las Vegas Sands and Wynn just trade together. You know, you can look at these two charts, put them on top of each other, and they look virtually identical. So casinos are casinos. If people are scared of Delta, they're not going as much into the casinos. They're a little more scared than they were a month ago, which is probably why we've had a wicked sell-off in those names.
Yeah. All right. I just want to bring that up because
no, I know, because I asked. You see Las Vegas Sands, and you think it's still got a presence in Las Vegas, and it doesn't. They should change the name.
They should change the name, really.
Yeah, I know. They screwed me over too. I didn't know it didn't have any presence at all in Las Vegas. I knew it had a huge, presence elsewhere, but I didn't know it was completely out of Vegas. So yeah.
All right, we'll do a few more from the chat. Let's look at Wayfair. I haven't talked about Wayfair for a while here on this show.
Hammered on Amazon.
Yes, down on Amazon. They report on Thursday after the close. No, sorry, before the opening bell next Thursday. Down on Amazon this morning. So, you know what? Maybe we should look at Wayfair and Etsy together, because Etsy also reports. Etsy reports also next week, and it's the same idea. In theory, if Amazon is seeing a slowdown of growth on e-commerce sales, and shouldn't Etsy and Wayfair and even Overstock also be experiencing that? So
exactly, anything that has a huge online presence, and obviously doing most of their sales online is getting hit hard here today. You can look at Chewy, CHWY is getting hit hard in the morning, and this morning. Etsy, Wayfair, all these stocks getting hit because of the Amazon report, because of Amazon's commentary from the conference call that people are going out more and not doing as much online shopping holds true. That means it's not good for Wayfair. It's not good for Etsy. It's not good for eBay. It's not good for any stock that's got a huge online presence. And that's why you're seeing these stocks down significantly more than the overall market today. Wayfair making new lows on the move. The valuation is nosebleed. I don't like to own stocks with nosebleed valuations that are making new lows, so I'm absolutely not buying the pullback on Wayfair here this morning. I need an out. I don't have an out here now. You took out yesterday's low. You're taking out yesterday's low at 257. You're trading health very much through to 253. So I'm going to wait. I'm going to wait for the dust to settle if I'm interested in Wayfair, but it's not even one that's on my shopping list. I have a shopping list, like I was saying with First Solar on my shopping list. Wayfair is not even on my shopping list. So valuation is extreme.
We're going to look back at late January, early February of this year, and some of those prices we're going to look back on and say, really? Like Wayfair got to 369. I'm not saying it can't go back there, but not a lot of stocks will not go back to where they were in January and February of this year.
Yeah,
and some of those, everything was going up. Remember, everything was going up for no reason at all.
Everything rally.
Yeah. Yeah,
we're digesting those moves here now. So where we go, it's again like it's a really hard market to call. This isn't this is why I got a lot of cash in the long-term portfolio and in the swing trade account right now, because you know what? It's a hard market to call. And I'm not trying to say you got breadth that's not good. You got the IWM that's down 5% from the highs. You got the S&P basically at highs, but now you lose Amazon. I don't know what to say. So, we could turn around and just start buying. The Fed bails us out, says something, and we start rolling again. But, right now, too many unknowns for me to be 100% stocks. And especially I would not be on margin right now. I'm never on margin in my long-term account or my swing trading account. But especially right now, if you're just buying stocks on margin, high risk. All
right, we'll do one more. I'm glad people asked about this in chat because I'm curious to get Dennis' thoughts on ATVI as well. I got stopped out of a trade yesterday.
I want the stock.
I got stopped out yesterday.
Oh, they're good. Stop out is good. When you're willing to cut your losers, I'm all about cutting your losers. Okay. What happened 3 days ago? Because I was on vacation. I have no idea. Was that earnings?
No, it was not.
What was the 3 days ago hammering in ATVI?
I'll tell you. They got Activision being sued by the state of California. For some apparently pretty bad cultural, company-wide sexual harassment stuff, and on top of that, I guess there was a widespread employee walkout the other day, and reports that development on World of Warcraft has just come to a screeching halt because the workers are pissed. Now there are concerns about a brain drain, people leaving the company, going to other places. That's what hit the stock a couple of days ago. And the company's reaction was not great. It sort of stuns me how every time these companies can't seem to, they never seem to learn. Their reaction to the lawsuit was, these are baseless accusations, and then when their employees, when they realized how pissed off their employees were, they're like, okay, maybe these are baseless. Maybe we should take this seriously. But that was the that's what happened on Wednesday. So Thursday morning, that was Tuesday. Sorry, that was Tuesday. So Wednesday morning, I came in. And I saw that big green candle at the open. I was like, oh, yeah, this is a classic buy the dip. Get me in here. Get me in. And so I did and sold yesterday.
81.56. That's the washout low from 3 days ago. That's the number that matters. And we might get a retest of that because we've come back down. Does it bounce there? Doesn't it bounce there? Do we have a level if we go out further to say that it should bounce at 80? You do have some congestion between 70 and 80, so you wouldn't actually think it might bounce there. Again, I don't know. Dust needs to settle on this one too. At a certain point, Activision Blizzard valuation becomes more attractive too. I rode this thing off Michael Pachter from 50 to 90. So I'm interested in getting my stock back, but I'm probably interested in the low 70s. So it's probably on my shopping list, but my price is probably significantly lower than 83.
Yeah. This is one. Yeah, and I mean the whole space has been off. I mean, you can look at EA too. The whole space.
Well, reopening here too, right? We're not sitting at home playing video games. This is a stay-at-home play. Activision Blizzard and gaming is sure you've got people that have become gamers, but don't kid yourself. Gaming is still stay at home. So it still trades with stay-at-home stocks to a certain extent. We've been having a little bit, in the last few months of reopening, stocks showing life, and it's not surprising that the gaming stocks are showing a little bit of selling pressure as we start to come out of, not sitting at home playing video games, but actually going out and doing stuff.
Yeah, I mean, I guess I hear that. But at the same time, it's not as if video games are growth is slowing down, right? It's, if anything, it's a demographics play. It's only going to get, especially if we get to the metaverse, Dennis. We need to talk about the metaverse today.
No, yeah, I think you're right. Long term gaming trends are still higher, so you do want to buy pullbacks on gaming stocks here,
right?
But we probably went like this. Do we have a little bit of for interest correction? Take-Two CEO was saying that in the last conference call. I don't know the one before this. Saying that the growth is probably unsustainable. That's why Take-Two was getting hit. I own Take-Two. I own Zynga. Those are two gaming stocks I own. I used to own Glue Mobile. I got taken out and bought out. I used to own ATVI, but I sold it because I just felt it had run too far. I used to own EA. I sold it right in here. EA has been struggling as well. So, if these stocks get significant pullbacks, I'll reload them.
I'll show you what I own. I own this guy, this puppy, the ESPO, which owns all of it. Although
that's another way to play it.
Although it owns a decent chunk of Tencent, which is not helping right now. Thank you very much. But that's how I'm playing this. Broad-based, whole damn industry. Get it in one fell swoop. Okay, it is 9:03. Someone asked where Jason Raznick is. He's busy doing CEO things, as he's wont to do. But we're going to say goodbye to Dennis today. And it's good to have you back. You should have your bearings now. You've been back for like a day and a half, so you should be back.
Starting to feel it. It takes you a full day to get the feel back. Like you can't just jump in, and I usually do just jump in. That's how I get the feel back. It's like, ooh, I'm not feeling that well, and I start losing some money. But I'm starting to get the feel back here. I had a decent trading day yesterday, actually, but it's sometimes difficult coming back from 5-6 days. When you're in the zone, when you're trading every day, you're feeling the market, you're connected to the market. I was disconnected from the market for 6 days, so just jumping back in and going all crazy, that's sometimes a recipe to lose money. So you got to feel your way back in, but I'm starting to feel the market. I mean, we get through today, and then we start going next week, and then I got my feel back.
All right. If any of you need Dennis to, do any maintenance on your campers, his number is 722. Yeah. Anyway, Dennis, you were missed. Good to have you back. Joel is missed, but Joel will be back on Monday.
Monday, we're all back together again.
It's been 2 weeks.
Back together again.
We will be together on Monday. Dennis, have a good rest of your day. And have a good weekend. We'll see you next week. All right. Here is the deal with regards to YouTube. Something weird's going on with YouTube right now, where for whatever reason, they're not allowing our streams to redirect to new streams when we end. So we do have all of our usual shows going on today, as we do every day, but for some reason, the videos don't redirect from one to the other. So what I did is I put the link to our next show in the description of this video, and I'm going to put it in the chat right now. Live trading with Benzinga, scheduled to start at 9:15 here in 10 minutes from now. There is the link in the chat. Again, it's in the description. You can always go to youtube.com/Benzinga to see what is live, but I don't know what's going on with YouTube, man. The redirect is not working, so they're making it a little bit harder for us to or for you really to find where we're live. So there's the link in chat, in description. Live trading with myself, with Mitch Hotch, Ryan Faluna, Zunaid Suleiman, 9:15 till about 10:30 Eastern time today. After that, we got SPACs Tech. We were talking about the SPACs to watch in August. Don't forget, everyone, it is the end of the month. There are some potential implications for that at the close today, but looking ahead to August, SPACs Tech will be previewing these SPACs to watch for the next month. Power Hour today at noon. No Get Technical or Moon or Bust today. Neil is out. And the Moon or Bust guys, if you can believe it, they decided to go to Lollapalooza apparently. So they're not even here right now. No, I'm being serious. So no Get Technical, no Moon or Bust, but we do have Zinger Stock Trivia at 3 o'clock. The At the Close show will be happening at 3:30. Money Mitch will be going at 4. Technically Options with Brad Weber. He really has a really good way of looking at options. He'll be on at 5 o'clock as he is every Friday. Okay, I think I got through all the housekeeping stuff. I I did. So here's what we're going to do. I'll hop off in a couple of minutes and get ready to go live trading with y'all on the next stream, live trading with Benzinga. And we'll just do that. We'll hang out. We've gotten some great feedback about that this week. We're going to keep doing it, but David Green will be back next week. He was off. He was doing his boot camp this week, but David Green will be back. But we will be doing more live trading at the open with Benzinga. I promise. I think like 3 days a week. We'll do a little bit Benzinga, a little bit David Green, because we got people that like both, and we don't want to disappoint anybody. So with that being said, I know there was a few questions in chat we didn't get to. We never even talked about I didn't talk about Shopify at all this week. Didn't they report Shopify? I like didn't even, for whatever reason, it never came up on. Yeah, Shopify did report, and it just never came up on the show for whatever reason. They reported on Wednesday morning. They blew it away. Oh my! But how was the reaction? Not great. They blew it away. Wow. Didn't even talk about that. We'll talk about that more coming up here on the next stream. So yeah, there's a lot we did. Yeah, exactly. It got buried. It was just too much stuff going on. This is the exact opposite problem we had 2 weeks ago, guys, when it was like so boring. This is the exact opposite problem that we're having right now. It's just too much stuff to talk about. So, okay, I'm going to hop off and get ready to go live trading at 9:15. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. If you haven't already, smash that like button, please, and thank you. Hit subscribe to our channel, get notified when we go live. That would be great as well. Pro.benzinga.com for a free 2-week trial, special end of the month offer in the description of this video. You could also win a free laptop with that special offer. Link in description. Thanks to all of you for hanging out with me. Thanks to our non-existent guest today. And I'm going to hop off, and you'll see me in 5 minutes again, live trading with Benzinga, happening right now on this channel. Link in description, link in chat, and that's going to be it. Everyone, good luck at the open. I'll see you guys in a few minutes. Actually, hold that thought. I was just told that I have the wrong link in the description, so I'm editing the description right now. I'm editing the description. I have SPAC in there. I'm putting the correct link. Okay, up next, there. The correct link is now in the description of this video. There we go. Thank you, Mitch, for telling me that. Now I will see you on live trading with Benzinga.